Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, June 10th, 2011. This morning I'm talking about, is this a summer soft patch? Well, that's what they'd like you to believe in government because, they don't want to tell you that there's a possibility that, we've got such structural issues that this may not be just a soft patch, but could be headed for a complete another decline. So it's hard to say right now what's going on, but we can see that the data is coming in noticeably weaker, and that's been causing a lot of fear in the markets, not to mention some selling in both stocks and commodities. So that's kind of what we're looking at. But what I'm looking at right here is I've just got a 5-minute chart up of dollar CAD. You can see that the loony's been strengthening. They just came out with their employment report, and it came in better than expected. All right, they added 22.3 thousand jobs versus an expectation of 20,000, which caused the unemployment rate to actually go down to 7.4% from the expected 7.6%. So they picked up 0.2% percentage points there. But just must be noted that the participation rate shrank just a little bit, so that could be a factor going on here. But you can see that the loony's been a little bit weak as of late. We've been seeing a bit of dollar strength happening, and you can just see we've been pushing up towards this 98-cent level. Here we are back moving down towards the 97s. All right, I want to take a look at the pound. Pound, you can see here, is lower across the board. All right, let's look at pound dollar. Okay, you can see pound's been falling off here. Now, they had manufacturing and industrial production figures that came in this morning way worse than expected. All right, industrial production was down 1.7% versus an expected no change. The manufacturing production was down 1.5% versus an expectation of a decline of 0.1%. All right, this pushes the year-over-year number in that field to 1.3%. The expectation was at 3.4%, so noticeably weaker for the pound there. We can also see that producer price index inputs were lower as well, declining 2% versus an expected decline of 1%. All right, and that's showing that prices are coming down a little bit. So perhaps the B of E is going to be vindicated here with their continuation of the accommodative monetary policy that we've been seeing. All right, we've got the euro lower as well. We talked about Trichet's comments yesterday in the ECB rate decision. Okay, markets believe that he will be raising rates next time around in July, but after that, they're not convinced. Now, Trichet sort of put the onus on the countries to solve this Greek debt crisis, and they're supposed to get it done by June 24th, although nothing's forthcoming. Germany's still sort of digging their heels in and saying, well, hey, you got to extend the the length of time that you're going to repay this money by, and that's fine, but what the rating agencies are saying is that that's going to constitute a default. So they're trying to avoid default in Greece. We're going to see how this whole thing plays out, but you can see that the euro is a little bit noticeably weaker there. So that was one of the things that is putting pressure on the eurozone. All right, but in the meantime, German consumer prices came in as expected, showing increases of 2.4% year over year, and the expectation in Germany is that their economy and their GDP is going to grow a bit. Just want to take a look at the Aussie here, and actually the Kiwi. You can see that the Kiwi's actually up a little bit higher. Okay, we're up at this. We just tested 83 cents versus the dollar earlier this morning. All right, that's an all-time high. Chinese trade balance figures came in lower than expected, and that's because imports in China increased dramatically. All right, they were expecting an increase of 22%. All right, they actually increased by 28.4%. So think about that. They increased their imports by roughly 28%. I mean, that's almost like, I don't want to call it a doubling, but if you think about 100% being they doubled their imports, well, they took 28%, which is essentially 30%. So that's a huge gain right there. And there's a dramatic shift going on in China right now, where they've been this exporting economy for so long, all right, and everyone's been complaining that their domestic demand isn't going. Well, now they're starting to pick it up. But I think what's really happening is that they've got such an excess of world reserve currencies here due to the fact that they've got this peg on their currency, that now they're just going around spending it. I mean, if you've got funny money in your pocket, you can throw it around any way you'd like. So you can see that the Kiwi's higher. All right, Aussie's still a little bit lower. Okay, but we're trading in a range here, 106 and a half there, 106.50 seems to be a recent top. All right, we had the shrinking unemployment report there from the other day, which showed that we were going a little bit lower. All right, so we've got some risk aversion in the market today. Okay, you can see dollar is weaker. Here's dollar yen. We're approaching 80 again, and we're just trading around this hereabouts. All right, if we get into a major risk aversion mode and we start to see increasing yen strength, there's possibility and talks that perhaps Bank of Japan or maybe even G7 intervention could take place. So, Japan's economic figures have been weak. We saw the negative GDP report that came in the other day, and they need some help with a weakening currency to try and kickstart that economy. So, all in all, we've got risk aversion this morning. Equity markets are down. Oil's pulled back, but it's still trading over 100. Gold's back a little bit, but still higher up in the 1540s. And it looks like just going into the weekend, nobody wants to sit long risk assets, and it's sort of a familiar theme. Market Dow has been down, I think, 4 out of the last 5 weeks, and it's the kind of thing where going into Friday, everybody sells ahead of the weekend just in case some sort of crazy event happens, and then it's game on again on Monday. So they can start dipping their toe back in and buying a little bit. But you can see that as of late, that Monday buying hasn't really started kicking back in, and it's just been slow, gradual declines. You get a midweek bounce and then a little bit more selling. So we're on a slower trajectory down. We've got dollar strength on the risk aversion play. All right, you can see that dollar Swissy, though. Swissy's weakening a little bit, and we've come up to just below this 84.5 cents. So that's off of recent lows in the 83s. So that's what we're looking at today. It looks like all this weakening data coming in. Everyone's calling it the summer soft patch, but it really could be seasonal and structural issues in the economy that are, causing, I don't want to say delays, but causing the economy not to grow. I mean, we can talk about, economic policies, fiscal, monetary, both here in the U.S. and abroad, and, quite frankly, there's a lot of diverging views about how things should go, but it's clear that what's going on right now is not working, so somebody needs to step up to the plate real soon. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.